You know, I'll pause the recording for now.
For all of those who have joined us this afternoon, I want to welcome you all to this afternoon's webinar. My name is Amy Williamson, and I am the Financial Empowerment Manager for the City of Sacramento. So the group of us here today are here because as a public service, our city offers no cost, professional, personalized, and confidential one-on-one financial coaching for local residents who are 18 and over through our initiative called the Financial Empowerment Center, or today you'll hear us refer to it as the FEC. So our lead community partner for the FEC is the Sacramento Office of International Rescue Committee, IRC. And so our FEC team of 4 financial coaches and 1 manager who you'll meet today work through IRC to provide this service that I just mentioned. So today we are kicking off, this is the first of a quarterly series that we're starting about different financial topics. So we will be doing one of these sessions every 3 months or so. So before I introduce the team to get into today's topic of student loans, I just want to give you a little bit more information about what the FEC does and how you can make an appointment if it seems like a good fit for you. So every FEC coaching client that we work with has different financial goals that they work on with their coach. But working toward those goals, the most common things that our coaches provide support around are establishing or improving credit, reducing debt, building savings, and accessing safe and affordable checking and savings accounts. So when you meet our coaching team in just a few moments, you'll learn more about their training and skills around those things. But if this sounds interesting to you, we have a lot of different ways that you can make an appointment. You can call us, email us, visit our website, and we even have a link where you can make an appointment on your own. And also at our website, you can download our flyer to use for yourself or share with friends and family. So in a moment, when the team starts the presentation, I'm going to share all of those ways of contacting us in the chat. So you'll be able to pull those out and use them when it's convenient for you. But really with all of that, I just want to introduce our FEC coaching team manager with IRC, Maureen Paley, and Maureen is going to kick off today's topic.
Thanks, Amy. Hi, everybody. My name is Maureen Paley. I'm the manager of the Sacramento FEC team. In a moment, I'd like to introduce our esteemed coaches. I'm just going to share my screen, which has the presentation that we'll go through today. So there we go. So here's our presentation. And Amy, can you give me a thumbs up? Can you see the presentation okay? Great. All right. Thanks, everybody. So today we're going to be talking with everyone about student loans. And this is the first and what we hope is many quarterly webinars. So 4 times a year, we will present a webinar presentation on a certain financial topic that we believe can help anybody who's encountering personal financial questions, challenges, and issues. And today we started with student loans. So before we get into the student loan information, I'd love to share some information about our esteemed coaches. And I'm hoping that you might be able to see them, but they will be each presenting a portion of the presentation today. So starting at the left, we have Marcia McLean, Luis Sanchez, Ganeet Singh, and Kurt Lewis. So it's my privilege to be able to work with them to provide these services to the city every day. A few things that I'd love for you to know about our coaches is that they have to complete a pretty extensive training program to become eligible to actually work with clients. So they not only learn about personal finance topics, but they also learn about coaching skills. So they learn how to help people tap into their own individual motivation so that they can reach their financial goals. They also have to pass an exam that is sponsored by an organization called CFE Fund, which is the original creator of the FEC model that's now duplicated or replicated, I should say, in over 35 FECs across the country. And each of our coaches needs to complete also continuing education every year to stay fresh with their knowledge and skills. Before we get started, I'm going to go over just a few housekeeping items. The presentation, the PowerPoint that we will go through is going to be about 30 to 40 minutes. And we are recording, and a recording will be posted later through the city's channels, most likely on our Financial Empowerment Center website. So we'll first start with the presentation, and then we'll take questions from audience afterwards. And you'll be able to submit a question through the Q&A feature on Zoom. So you should see a Q&A icon at the bottom of your Zoom screen, and that's what we can do after we finish the presentation. And we'll field each question one by one. Also, everyone's student loan situation is entirely unique. If you're someone who has student loans in repayment, or you're thinking about going to school and you know that you're going to need student loans, what you will find out is that your student loan situation is unique. So keep in mind all of the information you hear, which is actually going to be a lot of information, believe it or not, is not an exhaustive list of student loan information and what you might need to know about your exact situation. So after you sit with us for the presentation today, you may need to go back and look at your own personal student loan profile, do a little bit of investigating and research to see if you need to find out more information for your unique situation. So these last 4 bullet points on the bottom, these are the main things that we're going to talk about today. The first part of our presentation is going to be a basic student loans 101, the types of student loans that are out there, the key terms that you need to keep in mind, and the major aspects that anyone interested in student loans would need to know about. Next, we'll move on to the decisions that have already come out of Washington. As you may have already heard, the Biden administration has made some decisions regarding student loans recently and is signaling that they may make more decisions. So first, we're going to talk about the recent student loan decisions that have come out of Washington. And then for the last portion of our presentation, we'll also talk about the decisions that might come out of Washington. So we don't have a crystal ball, but we have been seeing, especially in the press and in the media, strong signals in certain directions. So we'll talk about those as well. And of course, we're going to point out how we can help with all of this. Regardless of what decision comes out of Washington, we can outline the types of things that we can help you work on. So I would like to hand it over to Kurt Lewis, who will start our presentation talking about what the student loan system is.
Hey, good afternoon, everybody. Yeah, it's time to go back to school in a sense and take a look at a little refresher course on student loans. Of course, what is the student loan system, or what's the main purpose of the student loan system? It's there to help bridge the gap between the resources that you may have been able to acquire through scholarships and grants and so forth, and the overall cost of your education and other resources that you may have utilized to help cover the cost, personal resources such as money that you received through work or other savings. But we understand that obviously there is a gap that comes into play between all of those resources that you were able to marshal and pull together to address the overall cost of your education and the final cost. And that's the purpose of the student loan system. Let's transition now. Let's talk a little bit about types of loans. Some of you may be familiar with this, or maybe a little bit fuzzy because it's been a little while. First of all, direct Stafford loans. Almost all the federal loans that have taken place since 2010 fall into this category, this type of student loans being direct Stafford loans. If you had a loan prior to 210, it's highly likely that you might have had one that was a federal, what they call federal family education loan, mouthful, loan that is distributed by either banks or by state nonprofits, but it is backed by the federal government. Some other loans that come into play that you might be familiar with. Some people, I remember, in fact, my parents, I remember, took out a loan way back in the day for me to help cover some of my costs in my education. So some parents will take out a PLUS loan to cover the undergrad expenses of their children as they head off to college, or in some cases, this would also apply to some graduates applying for professional training and seeking additional funds or loan funds. Prior to 2010, these would have been a part of the FFEL loan that we just talked about previously, where afterwards this is kind of rolled in and considered part of the Stafford loan program. Some of you may have what's called consolidation loans, where you have taken multiple federal loans and you've gone through a process of lumping them together into one overall loan. Then there's some Perkins loans. These are loans that come directly from your school, but they are required to cap the interest at no more than 5%. But these loans, if you do have a loan, Perkins loan, and you're having difficulty paying it, those schools can turn these debts over to the federal government for collection. And then lastly, some of you may have private loans. No federal involvement whatsoever, only loans that you applied for through private banks and other financial institutions. Before I hand it off to one of my other colleagues to talk about how you can identify your loans, some other key terms that are helpful just to refresh our mind as we look at student loan debt. First of all, just understanding what an interest rate is, that being that it's the amount that a lender charges us for borrowing money or taking out a loan, typically expresses an annual percentage rate on a loan balance. This interest rate also applies to percentages charged periodically on things like credit card balances that we're familiar with. But obviously, you're going to want to be mindful of what kind of interest rate your loan may be at, whether it's private or publicly backed or financed. There's deferment. And of course, a lot of people are become a lot more familiar with this because there's been broad deferment across the board as a result of pandemic for most, if not most student loans. And that being a deferment being a temporary postponement of your repayment. And a limited number of borrowers, including many who've been impacted by the pandemic, have fallen into that situation. And we'll get more information later on about where that stands currently. There's also forbearance, which is the permission to postpone or reduce or to extend loan payments because of serious hardship. Some of you may have gone through a process of requesting forbearance. It's important to know that in most cases, interest continues to accrue during forbearance. So the amount owed does end up increasing over time with an approved forbearance. We also have the next one, the important term is forgiveness. We all love that. That would be lovely to have forgiveness, also understood as cancellation or a discharge of a loan, meaning that your loan no longer is required, doesn't require to be paid. Some or all, I should say, some or all of your loan is required to be paid. And we'll explore this a little bit more in some links that you're going to see in a bit. Lastly, or actually, I think there's two more. One is delinquent. So if you are at least one loan payment late, or you've missed a loan payment, this is when your account becomes delinquent. And of course, if you have serious delinquency, that results in our last term, which is default, which is considered a failure to repay a loan according to the promissory note that you originally signed. And it's important to understand that this can lead you to be liable to legal actions, either taken by the school, the lender, the state, or the federal government to recover that money. So those are some key terms, key concepts with different types of loans and the overall purpose of the student loan system. So I'm going to hand it over at this point to Ganeet, who's going to take it to the next level.
Good afternoon, everyone. I will be speaking about how to identify your student loan. One of the quickest and easiest ways to identify your federal student loans. This is a federal student loan, and if you are unsure, I will be speaking about how to distinguish that a little later. But one of the fastest ways is to access the NSLDS, and that is the Department of Education's National Student Loan Data System. And you can access that by clicking this link, www.nslds.ed.gov. You can also call 800-4FED-8 and give them your information as well. That is another way to identify if you have a federal student loan. The NSLDS will also provide an approximate loan balance, the types of loans you had, who is servicing these loans, and other loan details that are very important to your federal student loan. Now, how to identify a private student loan? This is a little different process, but if you cannot access your information through the NSLDS system, it is probably a private student loan. If you cannot find any information on your loan on that system, again, it's probably a private student loan. Another way to understand is if the loan was made since 2010 and has the name of a bank on it and not a loan servicer, but a bank, it is probably a private loan. If the interest rate is 10% or higher, it is also most likely a private loan. If there is a cosigner on a loan, it is also most probably a private loan as well. Now I'll be talking about capitalized interest. So interest capitalization typically occurs when unpaid interest is added to the principal amount of your student loan. So the addition of unpaid interest to the principal balance of the loan is called capitalization. When interest is not paid as it accrues, your lender may capitalize the interest. The capitalized interest becomes part of the principal, increasing the outstanding principal amount due on the loan and possibly causing your monthly payment amount to increase. So I provided an example of capitalized interest over here, and I'll just read it real quick. Say you borrowed $30,000 for a 4-year undergraduate program at a 4% interest rate with a 15-year repayment term. If you do not make any student loan interest payments while you're in school, you may have accrued $4,800 in interest over that period. When you leave school, as soon as you're out of school, that interest is now capitalized into your loan, leaving you a total loan of $34,800 to repay with interest. So you might have to pay an extra $40 a month. And now because you're paying interest on interest that has been capitalized, you'll be paying roughly $2,000 more over the life of the loan. I've also provided here when do federal student loans undergo capitalization. I do want to make a note to say private student loans are all case-by-case basis. So it is something that you might want to check on your own and on your on your own case, but if you have a private student loan. But federal student loans undergo capitalization really depending on which type of loan you have. So if you have a federal direct subsidized loan, and this is a loan in which the federal government pays the interest on the loan while you're in school during the grace period after finishing school, so that's about 6 months, and any other time your loan is in a deferment period, your interest will not be capitalized onto your loan. And it's important to note that most of these direct subsidized loans are given to students in need. But in certain circumstances, however, if you go into forbearance, the interest that accrues during this period will likely be capitalized onto the loan at the end. The other side of that is federal direct unsubsidized loans. And these loans are loans where the government does not pay any interest for you during your terms in school, during your grace period as well. So unless you make interest payments while you're in school, the unpaid interest that accrues or has accrued will be capitalized into the loan when you begin to repay it. You'll also be responsible for capitalized interest during the other student loan deferment periods or the student loan deferments, periods of forbearance, or if you leave an income-driven repayment plan where your payment was less than the interest charges. And for more information and additional information, please visit the studentaid.gov website with the link also posted as well. And I'm going to hand it over to my colleague and my manager, Maureen, now, who's going to do a comprehension check for us.
Thanks, Ganeet. And just so you all know, I'll be adding that link in the chat later on in our presentation, the one from studentloans.gov, I believe. But let's do a comprehension check. So this is for all our participants. This is a chance where you get to answer this question in the chat. So here's the question. It's a true or false. There are no options for people who cannot repay their student loans. Is it true? Is it false? Go ahead and put it in the chat and let us know what you think. What types of answers are we getting? Oh, I can see the chat here. Okay, I see a lot of false, 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 false. Yes, So that is correct. There are options for people who cannot repay their student loans. The main options are the deferment or the forbearance, right? If you find yourself encountering a financial hardship, a forbearance might be the best thing for you. You can also take on a deferment. There are qualifying factors, so you would have to apply for either of them and then qualify for that. Okay. We're going to move on to our next section, which Marcia will share with us. This is about current news coming out of Washington, or the things that have already come out of Washington and who they might affect.
Thank you, Maureen, and good afternoon, everyone. So I'm just going to share a little bit about the recent student loan forgiveness action in Washington. If you didn't know, the White House has extended the broad zero interest pause. So we were just talking about that interest. There's a pause on that, on loan payments that began under the Trump administration. This forbearance is expected to end August 31st. However, it is likely to be extended through the end of the year of 2022. By then, most borrowers will not have made a payment in over 2 years. And when your payments restart, you'll be able to start making payments on the same outstanding balance you had when the pandemic began, unless you actually get some of that debt canceled. And then I'm going to talk about that next. So the Biden administration has canceled $5.8 billion in student loans. We want to make sure you understand this was an actual discharge for, excuse me, all remaining loans for the 560,000 borrowers who attended the Corinthian schools. So it's not just a sweeping cancellation across the board. So we want to make sure you were aware of that, but they are zeroing in on canceling 10,000 for all borrowers who earn less than $150,000 per year. And that's per CNBC reports, but the administration has yet to confirm such plans. So we'll keep you posted. The Education Secretary says they are continuing conversations about broader loan forgiveness. In April, the Biden administration announced historic reforms to federal student loan income-driven repayment, so IDR programs. Those include the income-based repayments and the revised pay-as-you-earn and some of the other plans. So basically what this does is after about 20 to 25 years in the program, depending on the specific plan, you could have any remaining balance forgiven. So that's something you could talk with your coach about to determine how long you've actually been in one of those plans and see if that is something you could take advantage of. Now, the IDR plans, the income-driven plans, they have traditionally been required in order for you to participate in what is the Public Service Loan Forgiveness Program. This program can eliminate federal student loan debt for borrowers in as little as 10 years if they work in full-time careers for government agencies or other nonprofit organizations. Just this past October, the Biden administration announced temporary changes to that program called the Limited Public Service Loan Forgiveness Waiver Initiative. So together with that initiative and the changes that have been made to the income-driven repayment programs, this will allow the Department of Education to count many more loan periods towards student loan forgiveness under both the IDR and the Public Service Loan Forgiveness. So you may have more payments out there that qualify for these programs than they did before October. So that could be something else you could talk to a coach about. Now, loan discharge for borrowers with disabilities. So student loan debt has been canceled for borrowers with total and permanent disabilities. So to learn more about applying for total and permanent disability discharge, here's some information in the slide. You can visit the websites. You can also talk with your coach to determine if you actually qualify for a total and permanent disabilities discharge. And this is just some more information here about letting NailNet know if you want to apply for that discharge. If you do apply, it gives you 120 days for you to give your application and any required supporting documentation that they ask for to verify your disability. And I think, next slide. Comprehension check. I'll turn it over to Maureen.
Thanks, Marcia. Great. So we have another comprehension check question, true or false? So here's our statement. Is the statement true or false? The Biden administration has forgiven all student loans. What do we think? I already see some answers coming through the chat. We got about 5 false so far. Got a couple more. Yep. False, false, false. Indeed. So the Biden administration has not forgiven all student loans. As Marcia explained, there's a certain grouping of student loans that have been forgiven for Corinthian college students. And we are still waiting to hear about the next steps of any other potential forgiveness that might come out of the administration as well. And to talk a little bit more about that, I'm going to turn it over to Luis Sanchez, who's going to talk to us about what might happen coming up in the next several months. Go ahead, Luis.
Good afternoon, everyone. So for my portion of the presentation, I'll be covering how the FEC can assist in these scenarios where maybe repayment is continued or there is some type of student loan forgiveness. So what about the future? So as mentioned earlier, Biden has in the past consistently supported calls for $10,000 in student loan forgiveness. And this appears to be a figure that White House officials are generally more comfortable with. Additionally, Biden administration officials have hinted that yet another extension of the payment pause may be coming in response to a reporter's question about whether the president would extend the relief again beyond August 31st. So how can we help? How can the FEC help? If there is some sort of federal student loan forgiveness, you may find yourself with extra money in your budget, and we can help with setting some goals like paying down some debt, starting or strengthening an emergency fund, maybe making a one-time purchase, maybe start saving for education, start saving for a house, or start making that dream of a small business a reality. This is another scenario. Let's say student loan payments start again. You have $10,000 in $10,000 in student loans are forgiven, but you have a total of $30,000 still. So that means you still have $20,000 that needs to be repaid. What now? Well, the FEC can help you budget and plan accordingly to help you make those student loan payments. And here are the comprehension check questions. So Maureen, if you want to take over.
Sure. So we have 3 final comprehension check questions. So we'll start with number 1. Let us know what you think about this statement. Is it true or false? Student loan forgiveness has already been approved for $10,000. So this would be in reference to the Biden administration. They've already approved the $10,000 in student loan forgiveness. We do have a bunch of trues. We've got a no, we've got a false. Great. Well, the answer is false, technically. So it hasn't technically been approved because this is the federal government and it's coming from a presidential administration. There will be a formal approval of any type of forgiveness that happens. We've gotten a lot of signaling that it's going to be $10,000, but we just don't know yet. So in a moment, I'm going to share some resources for if and when that happens, where you can go to figure out the ins and outs of what you need to do if that applies to you. So it hasn't happened yet, but we've gotten tons of signaling that it could happen. So stay close to the news. Make sure you look at the news over the next weeks and months. And we will also know as well, I think it's on a weekly basis, we're all sharing articles with each other about this signal from the White House and that signal from the White House. So we're going to be on top of it too. So let's try the next statement. What do you think about this statement? Is it true or false? Student loan repayment will begin on August 31st, 2022. True or false? I see one response so far. That's true. True, we got a false. True, false, false, maybe. Good choice. Okay, well, the answer is technically, and someone said September 1st. Thank you so much. So the student loan repayment, of course, would begin on September 1st because the payment pause is set to end on August 31st. But as we've mentioned, again, we've been hearing a lot of signaling, and we've already experienced a lot of extensions for that payment pause. So keep your eyes and ears on the news and listen out to see if those extensions have been made. Again, this is a formal thing that's done by a presidential administration, so there will be formal big announcements about it. Okay. The last true and false, let's see what you think of this statement. There is some potential for an extension of student loan repayment pause, of the student loan repayment pause. So do you think that's true or false? Yeah, I already see all these trues coming in. Right, great. We know what's happened in the past. So far, we've seen a bunch of extensions. There's been signals that there might be another extension. So again, these big formal steps that are taken by the Biden administration, they will be widely announced in the news and in the media and directly from the White House as well. So we're going to be on top of it too. All right, so a couple of helpful resources, and in a moment I will get these links in the chat for you. We found a pretty helpful article on a site called NerdWallet that talks about the recent, all the recent steps that President Biden's administration has taken in regards to student loans, and also some key dates that you might want to keep in mind. So I'll put the link in the chat for that in just a moment. And I also wanted to point you to studentaid.gov. As a lot of you probably know, when you see a .gov at the end of a website, it means that this is an agency of the government. In this case, this is the official website of student aid for the federal government. So this is a screenshot here. This is pretty much going to be your one-stop shop for resources and what to learn, the exact specifics about what you need to know that may affect your federal student loans. And most students have federal student loans. This might not apply to the private student loans. You'd need to go directly to the lender to understand that information. So keep in mind, studentaid.gov is a great centralized resource for everything that you would need to find out about your student loans. All right, and before we wrap up and go to questions, I just want to review the ways that you can get in touch with us. If the things that you've heard today have you thinking that you might want to start working with a financial coach, or maybe some of you have worked with us before and you're interested in restarting services, please get in touch. There's several ways to get in touch, and I believe Amy's put this information in the chat as well. You can always email us. Our email is fec@cityofsacramento.org. You can call us. The phone number is right here, and it's the manager's phone. I actually answer that phone, so you'd get in touch with me and I can route you to a coach for an appointment. And you can also schedule using our booking system. So this is a scheduling system where you can select a day, a time, a coach, and you can select an open slot on their calendar. As an added favor to us, if you can always include your name, your phone number, your email, so we have a way of getting back in touch with you, and maybe a little description of what you want to work on. As Amy mentioned at the top of the presentation, all of our services are no cost and available to anybody 18 years or older who lives in Sacramento County. So with that, I'm going to stop sharing my screen. I'll get a few links in the chat, and we would love to open it up for some questions that you might have. You're welcome to put your questions in the Q&A function that should be at the bottom of your screen on Zoom. No questions just yet. Well, I'll ask this in the chat. I mean, you can respond in the chat. How many of you, if you can say that have you heard some type of news report recently about what might happen with student loans? If you can tell us in the chat, have you heard that or have you not heard that? Yes or no? Okay, a few people have. Yeah, it seems to be, yeah, so a bunch of people have. So it seems to be like a pretty hot topic these days. Everybody's kind of waiting to hear what might happen with student loans. There's a lot of people that are hoping that they would be forgiven altogether. And then there's, as we mentioned, a lot of signaling from President Biden's administration that it would be just 10,000. So we're still waiting to see what actually comes down. And then we have one question, what about the student loan forgiveness program? That's something that we talked about a little bit. I know Marcia covered some of that in that part of her presentation. The student loan forgiveness program, the one that I think there's a few different ways to qualify for loan forgiveness. And I think the most popular is the public service loan forgiveness, but there are other ways to qualify for it. I believe the public service loan forgiveness is you need to make 120 on-time payments, which is monthly payments over 10 years, and then the remainder of your debt is forgiven. So that's a lot of people use that option who might work for in the public sector, maybe for the city, the county, the state, and also profit organizations. And I'd also like to add, if anybody has questions that they don't want to ask in the chat, you are more than welcome to share them. We've got one question in the Q&A. You're more than welcome to email them to me, I should say. I'm jumping to the Q&A area where we have one question. I'm planning to obtain a Parent Plus loan to pay for my child's tuition. I may have enough to pay for the first semester by selling some stock. What are your thoughts on that? Are there tax ramifications? That's a great question. Go ahead, Aubrey, did you want to share?
No, I was going to let you answer it.
Oh,
Sorry.
okay. Okay. So what I'll say first is that as a team, our program does not provide investment advice, which means purchasing an investment and also selling an investment. So we wouldn't be the people to help you understand whether making that decision is the right thing for you to do from an investment perspective and also from a tax perspective. But I can let you know that most times when you sell an investment, there is a tax implication of some sort. So I would suggest that you get in touch with a financial advisor or maybe a tax professional to talk out what that might mean for your investments and your taxes. There's one group that I will put in the chat. This is a nonprofit group where financial planners actually volunteer their time to work with individuals for free. It's called Advisors Give Back. And I will put it in the chat here. So that might be an agency you can work with to get more understanding about how to plan for what you might do with your investment and your taxes to help fund if you wanted to use it to fund a child's education. I hope that was helpful. All right, we've got another question. My daughter is considering pursuing higher education, which would require a student loan. This is a new territory for our family. Can we make an appointment to have a chat? Absolutely. Okay. All right, so that was an anonymous attendee. So if you send me an email at that FEC at cityofsacramento.org address, we can talk further about getting you connected to some support services. And I'd like to also ask the coaches. Coaches, was there any last minute items you wanted to gaps you wanted to close or circle back on certain issues or topics before we wrap up? got a few more questions in the chat, I think. All right, someone shared in the question and answers that they heard that a nonprofit organization staff members' student loans can be forgiven in certain circumstances. Yes, they can. If you go to studentaid.gov, that link that I put in the chat earlier, you can go there directly to find out about that option. If you work for a nonprofit organization, what options do you have to qualify for loan forgiveness? They're very specific. The government tends to be that way, pretty specific and process oriented. So you'll find all the steps there. Okay, we'll take a couple more minutes to see if more questions come in. And again, if you have an interest in working with a coach in restarting coaching services, please reach out to the email, to the phone number. You can go ahead to our booking system and schedule an appointment. Or if there was a question that you didn't quite want to ask today, but you'd still like a little bit more information, feel free to email me and I'll get back to you. Okay, we've got one question in the chat. What if the loan was over 30 years and the school has closed? Good question. Does any of the coaches want to tackle this one?
Yeah, so again, that could possibly qualify for a number of different options. But again, it's not something I could answer without knowing the individual circumstances, but that just looking at it, something over 30 years and a school closure could likely qualify for some type of discharge or cancellation. So that would definitely be something to talk with the coach about.
Great. That's great news. We've got another question. What is the maximum amount of loan I can get? I have recently passed the National Dental Board test. Congratulations. And I have to study 2 years of dental school.
So that will be determined, unfortunately, when you apply. So when you apply for financial aid, whatever means, you do that by your income and situation will be taken into consideration to determine what amounts you'd be offered. So that's, probably the soonest you could find out what the max of a loan you could get.
Okay. Good guidance there. We have another question. How does the loan forgiveness after 20 years program work? Do you have to be paying on the loans every month or does forbearance count? Marcia, I know that you've done some, you've probably done the most research out of all of us on this one.
So the 20-year, that applies to the new, the recent additions since October.
Mm-hmm.
So I do not actually know if you have to be paying on the loans every month. It would probably depend on what the terms of your IBR or your agreement was before that point. Forbearance usually doesn't count. However, it's still something to look at in your individual situation because forbearance, for example, interest normally accrues in a forbearance, but there were some instances during the pandemic where forbearance didn't accrue interest. So good question. Again, individual, hard to really hone down an actual answer, but you could probably, dig deeper and get to that answer working with the coach for sure.
That's a great point. And it seems like, COVID happened a little over 2 years ago. And with that, there were our student loan repayment pause and these different student loan debts that have gotten forgiven and different changes to the rules on forgiveness. So in a way, that's actually really good news because maybe something that wasn't able to qualify before, maybe now is able to qualify. And this is where, because we all have unique situations, we might have to call our loan service provider. We might have to look closer on the federal student aid website for more answers about the ins and outs. And also, of course, talk with a coach. That can be another way to sort out the specifics of your situation. Okay, we have one last question here. 2 months ago, my loan was transferred to another student loan company. My credit score went up. Today, I got a message my score went down, dropping almost 30 points. Is that usual for a credit score? Good question.
I could go ahead and answer this. Well, Lisa, so depending on which, first step would be, I think, to identify which type of loan you have, if you have a private student loan or a public student loan or a federal student loan. Understanding that, through the website of the NSLDS website, or just understanding where it comes from first is going to be a helpful first tip. And seeing if it has a servicer or if it's a bank is another clue to understanding why your credit score might have gone up or down. And a good suggestion I would say is, there's many factors to credit scores and FICO as well, not just student loans. So, I mean, there could be so many other factors that we don't know about of why the score went up or the score went down. But I do recommend working with a coach, and doing one-on-one counseling as well will help establish habits that can see, or where you can see where your score is going as well with the coach as well.
Yeah, great advice. I mean, one of the things we do with people every day is we take a deep dive into their credit report with them. I'm sure if you've looked at your credit report, things happen and it's like, why is this happening? So the coaches can look at it with you to try and sort out where those movements are happening, and I'll also set those goals for the movements that you want to happen as well. All right, I think that's our last question from the group. Again, if you have further questions, feel free to reach out to that FEC email.
I believe there's a question in the chat.
Oh, is there?
Yeah.
Great, thanks for pointing that out. Is there any student loan with zero interest so far for all and or for new immigrants? Good question.
I could go ahead and answer. I unfortunately don't know of any loan that is 0% interest for a student loan, but I do suggest that there are a lot of grants and scholarships on the other hand as well to look at for money that doesn't have interest added to it. That's another way to fund your way through school as well. I know that we do offer different types of loans here at the FEC regarding not just education, but other things as well. So again, signing up with a coach via the link would be a great idea as well.
Thanks, Ganeet. All right, well, I think we're ready to wrap up. We're thrilled that so many people have joined. Could we share the grant resources? I think we can try and do that. Resources for grants. I don't know if I have this person. Yep, the links. So is it Jahan that sent that? If you can email me, I'm going to put this in the city of Sacramento. If you can email me that question on some links, I will try and help you help locate some for you. Okay, great. So thanks everybody for participating today. Again, this is going to be a quarterly event. So we'll see you 3 months from now. Believe it or not, will be September. So we'll see you in September for another financial topic. And if you, we hope that you join us then, and we hope that you reach out to us for some support with financial coaching. Amy.
I just wanted to say thank you everyone for being here. And actually, if we don't mind taking one more minute, it just occurred to me, it would be interesting to hear what other financial topics you all would be interested in for future sessions. We have done some brainstorming and have some ideas, but if you don't mind sharing what topics might be of interest to you, that would help us with our planning. You can just share those in the chat, or you can always email those to us at fec@cityofsacramento.org, the address that Maureen just shared as well. Put you all on the spot. How to handle taxes if you're self-employed, small business credit. We've also thought about, with that last question that talked about the ups and downs in the credit score, that's always of huge interest, is what does go into the credit score. So that's one that I think we will do at some point, is, what are the factors that go into your credit score?
Amy, I'm going to suggest one.
Sure, of
That's
course.
been on my mind is inflation
Mm,
and how it affects us and what we need to watch out for, and maybe some strategies about getting through this time of inflation.
all right. Well, thank you so much, everyone. We appreciate your participation, your engagement, and hope that you'll follow up for an appointment. And we'll see you in a few months with our next session.
Thanks, everybody. Good luck.
Take
Stay
care all.
safe.